Good morning. It's Tuesday, April 2nd, 2024. Let's jump right into it. I figure I cover Humana because the same bad news that came out back in, let me jump to the 1 year chart. The same bad news that caused this dump is confirmed. Okay, so let's recap on this nasty dump here was the government saying that they're gonna allow I think 3.7%, somehow that number stick in my head, like a 3.7% increase in Medicare reimbursement, something like that. Okay, which of course Humana came out and gave a big warning on earning because utilization of the services went up a lot, but the reimbursement did not go up a lot. Okay, so give or take, that's what caused the big narrative change, technical breakdown in Humana. I have not, trade in and out of Humana all that much at all since that point. I sold some put spread here and there, but for the most part, that's it. I have not add one share, buy one share, trim one share, nothing. It's dead to me for now, right? And then of course yesterday after hour the news came out that the government are sticking with that percentage increase. They're not changing it, and of course there is another leg of panic selling, whatever. Okay, to me, when something get punished twice on the same news, it's ridiculous, but it is what it is. Would I say buy in? No. I jumped out and looked at a 10-year chart, and that was pretty ugly looking 10-year chart. What was that? Where was the 10-year chart? The question is, where is the bottom, right? That's the question. I'm looking at this thing where it stopped last time. Makes sense, right? Because here, take a look at this. You can draw in the zone. It made perfect sense where it danced for the past month. Okay, you got this area right here, this support right there, and bang right there. Okay, so not ideally a zone that you want to break because you're talking 1, 2, 3, 6 years plus. 6 years plus of support breaking on this. Once again, can it wick down and bounce and then back in the zone? Anything is possible, right? But until the day is over, I would suggest do nothing. Now, where else can it go? Okay, that's the question. Where else can it go? Can we figure out a spot that would make sense potentially? Can we settle in something like a 309, 306 to 309? That's possible. Okay, that's entirely possible. Let's draw in another zone. Okay. Now let's extend this zone to see if it makes sense. As always, okay, let's do it further. There you go. Potentially that could be the next area. That's all you can do. Okay, as far as TA wise, you're just gonna have to go level to level, and if you want to, you can even draw this down all the way down to here as far as the zone 297. Okay, that's how ugly it can get. But that's where I think the next leg should this not hold. So the key is if this thing wick down and then bounce back in the zone, then this level of support zone held. If it break down and stay down and behave as if this turned into a resistance, then guess what? Then 306, 310 is where we're gonna end up eventually. Okay, eventually, and then that would be the next area that I would consider buying into Humana until the story changes. As always, when things are bad, it can stay bad for quite some time. Sometime a year, sometime 2 years. But the sun will rise. Okay, the sun will rise. There will be time to buy in for the big gain. Okay, just look at the advanced auto zone, advanced auto part, or whatever, AAP. Just look at AAP. Look at that chart. Look at Roblox. Look at Octa. Okay, the sun will rise. All right, I bring up all the indices because I want to talk about them as far as shorting. Yesterday, oh, it would have been a sweet bear spread if it works. I just missed it. On the pop in the early, I entered in the order. The short spread was 524, 520, very tight. Okay, that was the bear spread I put on. 524, 520, a $4 spread with a dollar. I think at the time that I entered in the order, it was $1.40. Not a bad trade. Okay, $1.40 with a maximum gain of, well, if it cost me $1.40, I would have made twice the money if the bear spread worked and the SPY dropped to 520. And look, pre-market is already there. So yeah, that's the thing about being short sometimes. Just missed it. Okay, now does that mean that I'm gonna pile on? The answer is no. And chase it? No. But it's worth watching. Okay, because to me, if the 20 break, that could be a play, right? So, but for now, I missed the 524, 520. Nothing I can do about that. If the 20 fail, okay, first of all, I want to watch it. There is some economic data that came out. Who knows what's going to happen? The market can bounce, but the play is if the market bounce, then I will see if I can put the same play on. I was doing a 1 month bear spread, but if we do have a breakdown because of econ data along with a much needed 3 to 5% correction, I will watch this 517 real close. If the 517, this trend line where it was dancing for literally a month, if that break and the 20 break, then I might do a 516, 506, 516, like a $5 spread. Yeah, that could be in play. Okay, so yeah, hey, just because all the short spread did not work in March does not mean that it's not going to work in April. All right, so that's SPY for you. And then how about QQQ? QQQ, a little bit trickier, right? Because it has failed the 20 and then bounced off this support. So it's not as easy to say, oh, below the 20, I'm going to short. Okay, and so for me, I am leaning more toward avoiding shorting the Q because you have, look, you got the 20, you get the 50, and then you get this. So there's a lot of confluences of support that's come in between 435 and 440. That's pretty tight. Okay, that's really tight. And do I want to do 442, 436 bear spread, that might work, but to me, that's just way too tight of confluences of support to even bother. So as far as me, I would just stay out of it. Um, but for the bold and brave, yeah, you can try. But just remember, just look, the last, not just once, twice. See, you got breaking the 20, bounce off the trend support, break the 20 again. Okay, so and then now you got the 50 rising into it too. So yeah, it's just not a whole lot of room to profit. Lastly, DIA. Um, is there room to short at, see, if I was to focus on DIA, I was focused on SPY and that didn't work. But if I were to short yesterday, no doubt 396, 390 would have been the play. Okay, because sure, once again, the 20, right? So here I like DIA more than QQQ as far as a short candidate. Once again, if I do it, I would do three. Sure, not right now. Okay, I'm not gonna chase a short when it's falling. Um, what I want to see is, does it come down to 393 where another trend supporter it danced? Okay, it was resistant, and then it break out, and could it be support? That's the key. Okay, pre-market showing that it's gonna be below it. So depending on what's going on, but if it bounce, I wouldn't mind doing like a 396, 390, like a real tight range. Okay, a $6 range for a cost of say like $2. That might be something that's doable as far as DIA. Okay, and that's it. As far as the rest of the market, I did not buy much of anything yesterday. I trimmed, and I will continue to trim the winners into this skittish April. All right, so I have a lot of buy orders in, but for those that need a quick recap, a lot of those buy orders on the FAB5 are at the 50 MA or below, or somewhere around there. As far as gap fill, 50 MA, ref low, we are a long way away from a lot of those orders. So we need to see a 3 to 5% market overall correction for me to do a whole lot of buying. We need this, okay, as far as a correction. All right, have a good day. Be careful out there. For the youngster, Hill Street Blues.